welcome to the channel. In this video, we're going to look at backtesting a MACD strategy in Thinkorswim. We are going to use their default strategy, and I'm going to show you how you can make a change to their default strategy in case you want to have it buy and sell based on different conditions. So to get started, what I'm going to do is I'm going to throw on just a random, we got Apple right here. We're going to put the MACD on. And I want to point out a couple things about the MACD because the strategy that they have built relies on the values of the MACD for its entry and exit triggers. So here's the MACD, and I like to have the value as green and the average as red. Personal preference, you don't have to mess with this. But what I want you to notice is when the value crosses above the average, right? And when the value crosses below the average here, okay? That's going to be kind of what the default strategy is built upon, right? Now, in order to get the profit and loss values for your strategy, we need to put on the floating PL study. Now, there's nothing here because we don't have a strategy selected yet. So I'm going to go to strategies. And so I was playing around with this strategy earlier just to make sure I knew how to make this, and I made one. But I'm going to go ahead and delete it, and I'm going to show you how to do it from scratch. So MACD, this is the default MACD strategy. We're going to apply it. And then once I click apply, you will see this profit and loss area down here either go red or green to indicate profits and losses. And you're going to see on the candlestick chart itself, you'll see something like max strat, buy or sell or something like that, 100 minus 100. So 100 means they're buying 100 shares, minus 100 means they're selling those 100 shares, okay? So here we go. All right. Now you'll see here, LE, I think that might be long entry. Maybe this is short entry. But anyways, so you'll notice this is just indicating where the triggers, once it's being triggered, where the buy and sell is occurring on the chart in time, right? So you'll notice when the green line, the value line, crosses above the average line, the red line, it buys. When it crosses below, it sells, right? It doesn't matter where it is, above or below the zero line. As you can see here, all these buying and selling as it's whipping back and forth over each other. And here is the profit and loss down here. Okay, so let's go ahead and look at the code for that. So we're gonna right click here on the strategy itself, right click view sources, and this is the code. So what they've done is they've taken the MACD function, right? And they're using it as a reference, and they're getting the difference. And they are assigning that to a variable named diff. And then they're saying, when diff crosses above 0, we want to buy, okay? When diff crosses below 0, we want to sell. So again, when the difference between these two is greater than 0, or when it crosses above 0, not when it's greater. If you put that as diff greater than 0 buy, then every candle will trigger a buy because every candle here will be the difference is greater than 0, okay? So you don't want it to be just simply diff greater than 0 because then it will buy every time. Maybe it is what you want, but that's not the same as crosses above, right? So here is crosses above, here is crosses below, okay? Now, we can't change anything in here because this is their default strategy. This is their built-in strategy. We can't mess with it. So what we're going to do is we're just going to copy it. Copy the whole thing. Copy. Cool. And then we're going to back out of this, and we are going to create our own strategy. We call this My MACD. We are going to paste it all in here. We're going to make sure that there's nothing in here, right? And then we're going to paste it all in here. And you don't need all this stuff up top. That's just them commenting and saying, hey, we built this. So now, to show you where they're getting this .diff call, you can Google ThinkScript, click on ThinkScript, and then here, so this is kind of like their docs page, their documentation for their language for doing these strategies, okay? If you want to code something up in Thinkorswim, then this is going to be your documentation. So MACD, I'm going to go to MACD. So here, they're calling .diff, the difference between the MACD and its moving average. So the value and the average, which is the green I put as the value and the red is the average. So they want the difference between them, okay? Now I want to use, let's say, to change it up a little bit, let's say I want to buy only when the value is greater than the average. So only when the value is, or crosses above the average, I'm sorry. When the value crosses above it, and I only want to buy when the value is below 0. So I only want to make this order down here. I don't want to make it, let's say if this whips back up, I don't want to buy again here. Let's say that's the trading strategy that I want to use, all right? So then I'm going to need to do value and average and assign those to variables. So I'm just going to copy this code they have. There's no point reinventing the wheel here. I'm going to copy it twice since I need two, different versions of this. So I'm going to call this value, and I'm going to change the .diff to .value. And now this is going to be case sensitive to what is shown here in the documentation. Okay. Now this is going to be average, so capital AVG. All right. Now we don't need this .diff anymore. I'm going to comment that out. Now on the order, so this is buy auto. I'm going to do buy to open. And I'm going to change this to sell to close. I don't know why I did that. That's okay. Sorry, typing was off. And then I'm going to say I want the value that I defined up there. So that's going to be this green line. I want it to cross above the average line. And, so this is a logical and, right? So this is saying that piece and this piece must be true. And I want the value to be less than 0. Okay? All right. And then let's say I don't want to use their name, so I'm just going to say buy to open. And then over here, I'm going to say sell to close. Now you can change these things over here, but I like to just, if you're getting confused, start clicking around over here and you'll be able to change a couple of things. All right. So here you'll see and. So conditions, this is what I was saying. It's the logical ands. The logical operator used to define complex conditions. It is required that each condition from it is true. That's what I'm saying. So both of these have to be true. If I used or, that means only one of them has to be true. But if both are true, it will still execute. So let's see if or is in here. It should be. If not, I think that's kind of weird. Nope. Or right here. I don't know if they have XOR, which is an exclusive or. It doesn't look like it. So I'm not going to worry you with that. Anyways. So let me just get out of this nonsense. All right. So now what we have is so we have value crosses above average. I'm not sure why these are red in here. Crosses above average. And value less than 0. Okay, and then here, let's say we want to sell when value crosses below average. Now, we don't care if it's above. So this is saying, oh, I didn't change it up here. Sorry. So that's why it's giving me the errors in red, because I didn't change this to AVG. There we go. So it was trying to call AVG, but I hadn't changed it up here. I got ahead of myself. So my apologies. So here, value crosses above average and value less than 0. So right here, value is crossing above the average and the value is less than the 0 line right here, right? So you'll notice over here, value is crossing above the average, but value is not below 0. So in this strategy that I'm making, now I'm not saying it's better, worse, or equal to theirs. It shouldn't buy right here because the value is not also less than 0. Okay. Now we're saying we're going to sell to close that position. So never mind, I won't get into other stuff. So we're going to sell to close our open position when the value crosses below the average. So here's a cross below, we're going to get out. So cross below, we're not going to do anything because we never got in, right? So if I did buy, or I'm sorry, sell auto, then this would sell 100 shares even though I didn't buy to open 100 shares, which would indicate this would be a short position at that point, right? So if it's a short position at that point, I can't go back over there. So I'll show you on the chart here in a second. So we're done with this. We just copied their code. I commented out their diff line because I didn't want to use it, and but I copied it and pasted it 2 more times and changed the function calls at the end. So we are just using value and average, and then we hit OK. So this is called my MACD. Hit OK. Now this right here is built off of their strategy. So I think mine is going to be less profitable, maybe even dwindling. But we'll see what happens because I'm not getting in on this run up. So we'll see. So I'm going to take theirs off. I'm going to hit apply. And here you go. So we buy to open 100 shares here. All right, so we buy to open, we have 100 shares. So we had the value crossed above the average, buy to open. Okay, cool. Hold, so we're holding. Value crosses below the average, sell in the next candle. Because it doesn't sell immediately here because this has to confirm. Like once this goes down and once that candle closes, then on the next one, it can trigger the execution of the order. So sell to close. All right, cool. So we're not doing anything. Value cross above the average, buy, get in. And then the value crossed below the average, sell, get out. So we have buy to get in, sell to get out. Now this made just a little bit, but if you're trying to squeeze out every little piece of profit, then you might try and find a way to get out up here. I mean, if you can write code to get in here and get out here every single time, then don't give that away for free. Prove it by trading it and then sell it to a big investment company or quant fund or something like that and make yourself filthy rich, right? So if you know how to do that, don't give it away for free on YouTube. Or you can, but you can also sell it. I would imagine you can sell it because they like money. I like money. Anyways, so here we go. We are crossing back above. The value is crossing back above the average, and we're below 0. So we're going to get in. Cross below. We're getting out. Now, this touched it, but this is going to... So let's look at this real quick. So this didn't cross, so we're good. But even if it did cross right here, okay, then it still wouldn't get in because it's above 0. All right. So yeah, still wouldn't have gotten in. Now we come over here to the ends. We buy to get in here. We get out here. And we did not get back in here because this value is still above 0. So we're missing this entire run up here, which is kind of shaky back and forth. Now these flat lines on the profit and loss, that means that we are stagnant. We're not gaining or losing any money. We're sitting right here. Okay. So let's look at this. So this is 1 day. What is this? 1 day for a year. And $2,983.50 on this one. And then if I change it to their strategy, So I'm at 2983.5. Theirs is at 3416.51. So theirs is roughly $500 more than mine. So take theirs, right? Now let's look at how these do on, I don't know, larger time frames, different stocks, right? So their MACD strat, let's take this out to time frame 1 year. Oh, sorry. Time interval, 1 year, aggregation period, day. So this is going to be maxed, right? So for the max time frame that they can pull on this, so this is going all the way back to, what is this, the 80s, 85, the end of 84, 1984. So $12,929. Let's call it $12,930. Now let's put mine on there and see how mine would fare. So 12,930 and then 8,866. So theirs does better there too. So there you go. Let's see. I mean, it's consistently growing. It's just growing a little slower than theirs. But hey, sometimes you win, sometimes you lose. I mean, both strategies are winning. Theirs is just winning more, right? Now let's drop it down into 4-hour time frame. Let's see what happens there. Ooh. So this is 4-hour time frame. Whatever the default 4-hour is, I'm guessing that's good. So 180 days. And this includes after hours. So I'm at 1286.5 and theirs would be at so 1286.5. Theirs would be negative. So on the 4-hour, maybe mine's a little better than theirs. And maybe theirs is better on the daily. It's just something you need to figure out how you want to implement your strategy. Now let's look at SPY. So on SPY, they're at negative 31.95, let's call it. And mine would be at so we go from negative 31, let's call it negative 31.90, just to whatever. Mine would be at positive 733. So it looks like on the 4-hour, mine may do a little better, but who knows why that is? It could be because a lot of big market swings happen after hours. So mine may be able to take advantage of that versus having to deal with just buying and selling during regular market hours. So maybe mine takes advantage of the swings. Let's look at some of these. So here it is buying to open in pre-market. Or maybe it's post-market. So this is going to be, this is 4-hour candle. So this is the first 4-hour candle of the day. So this is going to be pre-market. And then it's selling. So this is 1 day, 2 days, and it's selling to close on the 3rd day. So let's see, the MACD crossed after hours, pre-market, and then it crossed back down. So here, if you wanted to, you might even be able to change this into like 2 hours, maybe 1 hour. Look at that. So with 1 hour, we can get a little tighter on that. But anyways, my point is that they have default strategies. You can change them to fit your needs. All you do is you edit studies and you find a strategy that you want to mess with. You can use it as a template, or you can code your own from scratch. I like to use, oh, that's mine. Duh. I like to use theirs as a template so I can kind of see the function calls, right? Right click on it, view sources. This is the code. You can copy it over into yours and just make a couple little changes. Don't forget, Thinkorswim has their own website, right? You just go in here and you go into ThinkScripts, or you can Google ThinkScripts, and you can type in, let's say, moving average exponential. Where is that? Right here. Here you go. This will give you information about it, the input parameters, and the dot diff, dot whatever. So dot average, AVG exponential, dot up signal, dot down signal, right? So yeah, I hope that's helpful. Please let me know if you have any strategies you want me to backtest on here, and I will code them up, backtest them, and I will provide that code to you so you can code them up and backtest them and verify what I'm doing. I'll also put a link to where you can find this code. And yeah, let me know if you have any comments, concerns, feedback, requests, anything like that. And I look forward to making another video for you. Thanks. Have a good day.